Hey, good afternoon, everyone. Thanks for coming. We're gonna start in 60 seconds. There's a lot of traders coming, so I'm just gonna give them one more minute before I start. Hey, good afternoon. Thanks everyone for coming in. Now, hey, Peter. Okay, hang on. Let me shoot my screen. Well, remember that that's not part of this webinar, Peter. This is the three line, and I'm going to explain this to you. Okay, and I want to teach you a little bit how to trade it. Now the questions box is open, and unlike normally when I give a webinar, I answer the questions at the end. As the questions come up, I'm going to answer them. And what I did was I recorded about a 45-minute video on all the trading techniques you can use to take trades. In addition, it's really sort of a soup to nuts, because what we're going to do, and this is what we always do, like based on what you're trading in your time frame, we're going to give you our recommended ATM or automated trade management strategy. So you're going to get a stop and targets, depending on how many you want. Also, we do all the tech support. And you're going to be trading with me in the morning. So you're going to get a lot of educational support. And what I want to do is go over how we trade the three line. So this is really the whole enchilada of how you trade, and it entails a lot of the issues that most other trading rooms don't even get into. They're not going to tell you what the best stop and best targets are. You have to set those up yourself. We were very heavy duty on tech support and really heavy duty on educational support. So we can go to any place on the three line. I pick crude, and later on you can ask to see any instrument on any time frame. Now, I alluded at the end of the webinar a couple of days ago to Alexander Elder and the triple screen method. And the most important indicator on the chart is background bias. Now, there is a mathematical formula that says, like, every independent variable that determines the future movement of price is not equally powerful. So we assume that order flow is equally powerful to momentum, is equally powerful to stochastic, and that's a reasonable assumption. But we know that the most powerful force governing the market is the multi-time frame alignment and trend. Hold on one second, Tamir. Let me see. Listen, the Laguerre is Sunday. Today is the Trend3 system, Tamir and Peter. So I just want to make that clear. Now, a lot of the principles that I'm going to talk about today are still operational on that. So it's worthwhile to listen because, as I said, the most important independent variable is the multi-time frame alignment and trend. That's when you're going to get all your sweet trades. And I just put up crude because it has nice volatility. We squeeze the chart. You're going to see that the best trades are going to occur when you have up background bias or short with down background bias. And in between, you tend to get just nothing but a lot of chop. So what that really means is, if you go back to what Alexander Elder said on his triple screen, unless you have a multi-time frame alignment and trend, really nothing else is going to be particularly powerful. When your two higher time frames are moving in different directions and there's no alignment and trend, no matter what signals you have on your trading chart, even if the signals are based on a multi-time frame assessment, the trend is the most powerful factor. Now, what I want to talk about briefly is why the pink color is the strongest down and why the dark green is the strongest color up. And remember that these assessments are not made off your trading chart, and it doesn't make any difference what you're trading. A minute chart, a time chart, a range chart, you're not going to look at price to determine this background bias. 99% of the software is simply looking at price on your trading chart, and when it creates a MACD crossover or it does whatever it's supposed to do, the background turns green. And doesn't have any predictive value. This is looking at the two higher time frames. So what I want to go over quickly with you, and I'm going to use paint to do it, is show you what the three different colors are. Now, before I do that, let me just show them to you. The dark green is the strongest color up, and that's really the sweet spot to trade. When you get a long signal on dark green, the likelihood that that price is not going to rise is small. The next is cyan, and the weakest is light blue. And you don't have to, obviously you don't have to memorize that, but I just want to show you the colors. And if you go to the indicator and open it, and you go to the bias, you can see these colors. There's green, there's light blue, and there's cyan. And the three down colors, dark pink, the strongest, light pink, the weakest, and in between is the bisque color. See how price on this dark pink background, it's not going to go straight down, but the bias right here is price is going to fall. And if you try to take a long trade here, you're going to have big problems. So you have the dark pink, the light pink's the weakest, and there's the bisque color. That's the intermediate. So what I'm going to do, dark green, John, I'll show it to you. It's what I'm calling dark green. It's right here. I mean, if you want me to call it green, I will. But that, I'm just trying to delineate the three colors for you. Now, here's what produces those colors. What we're doing is we're looking at the 4 and the 6 unit Renko, which are the two higher time frames. Now, here's the 50, and here's the 15. Now, I'm going to put the color on the side. This cyan color up occurs when the 50 is up on the two higher unit Renkos. Everything that I'm telling you must be the same on the two higher for you to get this cyan color. If there's no higher time frame alignment, you won't see it. So you have the 50 sloping up, you have the 15 sloping up. Price must be above the 50. Now, that gives you this color, the cyan color. Now, the reason this is a riskier trade to take long on your trading chart is because the 15 has not crossed the 50 yet. It gets safer when the 15 matures and crosses the 50 to the upside. So then you go from cyan to dark green. And that's the point where you have the safest long trade. The 15s cross the 50 to the upside, and price has got to be above both. But eventually, the trade is sort of going to lose energy, lose momentum. The 15 is going to go flat. Whoops, let me take that out. Like that. Again, price has got to be above them both. And that's when you get your light blue. Now, you can only trade long here, but you also know that you've lost some upside momentum because the 15 is now flat. So you have the two intermediates, really. The light blue, where you really do lack momentum, but you've got price sitting on top of a huge amount of resistance to the downside. Taking a short here is not possible. And then you have where the 15 and the 50 are trending up, but the 15 hasn't crossed to the upside yet. Now, that's a tradable setup. And the closer the 15 is to the 50, the better you are. But there's no way for us to be able to tell you. And there's no way, we've tried a million ways, but it's just not possible. So this is a riskier trade to take, but at least you know you're in a strongly trending market. The risk is that the 15, and I'll go to a drawing tool here, it's just going to peter out like this and then swing right back around, and you're going to get stopped out. So those are the three different colors and the risk associated with each of them. And obviously that dark green color is without a doubt the best time to trade. You're above, you've broken all resistance to the upside and sitting above a ton of support. You have a strongly trending market, and the 15s cross the 50 to the upside on the two higher unit Renkos. The same thing occurs to the downside. Exactly the same. Now I'll just move that to red. You have the 50 down, and you have the 15 down. You have that bisque color. We'll find it. There it is, right here, where the 50's down and the 15's down, but the 15 hasn't crossed. And oftentimes the trade will mature and the 15 will continue on, cross the 50. Now price must be below the 15 and the 50. So this is not only giving you a trend, it's also providing, it also provides you with market structure, which is something that an indicator rarely does. It not only gives you the trend, but it tells you where price is in the trend. Because what would happen if the 50's down and the 15's down and price is up here? That's possible. You don't get that color. So price has to be below both. So before the 15 crosses the 50, you get the bisque. When the 15 crosses the 50, you get the dark pink. And then when the 15 flattens, you go to light pink, right here. Now you know that you still have considerable resistance to the upside, but you've lost a lot of downside momentum. Now, when you don't have any background color at all, you have no alignment in trend, market structure and trend actually, on any time frame. And if you look, we find an area like right here where there's no color. The goal of our software is to define risk. If you want to know when it's risky to trade, it's very risky to trade here. Now, obviously a trade may mature out of this, but if you take a long trade here, it's too risky. You take a long trade here, it's too risky. And remember our number one goal as a trader, it's not to get winners, it's to avoid losers. It's to disassociate ourselves from any risk. And during these clear periods of time, like right here, it's most likely that the entries are not going to work. And right in here, just chop, 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 and eventually on crude it breaks out. And here's a great example right in here. Now, if you try to trade in anything during this area, you're really going to get beaten up. Now, this is on 118, and this is in the afternoon between 11:18 and 13:31. So we know that we are not going to take any trade in this clear area. Doesn't make any difference if we've got order flow, stochastic, and momentum. It doesn't matter if we have an oscillator signal. Our most important independent variable, that multi-time frame alignment and trend, is not with us. Therefore, these entries just don't have any kind of real power. We've got to wait for that to come, and then we're ready to take a trade. And remember, as a last reminder, this is not only looking at trend, but it's also looking at market structure. You don't have to look to know where price is when you have blue. You know it's above the 15 and the 50, and you're too higher. When you have green, you know it's above the 15 and the 50, and the 15 and the 50 are going up, and the 15s cross the 50 to the upside. So when you get a retracement, you know that what you want to do is go long. When you get a retracement, you know that what you want to do is go long. And you're never going to take a counter trend trade. Sometimes they work and sometimes they don't, but that's exactly the kind of entry that will get you beaten up. Sometimes it does and sometimes it doesn't. You want a trade entry that works almost all the time. So you want to take a retracement into green and long, retracement into green and long. And look at this pullback. Now, there's no oscillator signal here. We're going to go into those trades a little bit more, because although the oscillator gives you great entries, you're not constrained to take just oscillator entries. They give you one subset of entries. Okay, Fitzroy, these are the pivots. And I'm going to go into that in a second. So that's background bias. And that's a really, really key component of our trading. Now, you can do the same thing without this indicator, but it's an enormous amount of work. You're going to have to put up the global tracking tool, and you're going to have to globally track the 4-unit Renko and the 6-unit Renko. If you're looking at a 5-minute, you're going to have to globally track the 15 and the 45-minute. You know, whatever you're trading, you're going to have to keep tabs on these 2 higher time frames with that global tracking tool, and it's tough. I mean, you could just watch the right edge, but it's a lot more difficult. This makes it real simple to know on your trading chart what your 2 higher time frames are doing. Now, the other component, here's the 50, and here's the 15, and these are really, really optimal moving averages, better than anything that you can get on a drop down here. I'll show you the EMA. I didn't have a chance to do that, but let me show you the standard 15 EMA versus our EMA of our EMA. And what happens when you take the standard EMA is, you see how it gets buffeted by price? This one candle pushed this price up. Here's a better example. See how you get one up candle? Up goes the standard EMA. So all it takes is one candle to start changing the direction of the standard EMA. 2 candle retracement, like this multi-candle retracement, pushes that EMA all the way up. In fact, it changes the slope of the EMA. The EMA slope actually develops a positive slope. But if you look at our EMA of our EMA, it's extremely smooth. It's got all the speed. It tracks it all the way, but it's smoother. So you never lose that downward trajectory. And moving averages tell you obvious support and resistance, but they're also an assessment of momentum. And you never lose that downward momentum on this chart. The same thing with the 50 of the 50. Again, not going to put it up. It acts the same way. It has the same speed as the 50 EMA, but it's much more stable. So it gives you, it's in a sense, it's one of the rare times you get the best of both worlds. You get the speed of the EMA with the stability of an SMA. So it's a great tool to use as support to track price. Now, another one of our trading rules, in addition to looking for background bias, is we will not take a long on our trading chart until the 15 crosses the 50 to the upside. And we're not going to take a short until the 15 crosses the 50 to the downside. And that's very, very important. Now, are you going to lose some winners? I mean, are some winners going to skirt by you? Absolutely. But as we trade with more specificity, the probability that a winning trade that we take is going to win starts getting higher and higher and higher. And you see this trade right here. We're on dark green. The 15's above the 50, but still fairly tight. Oscillator entry, 3-line order flow, stochastic, and momentum, and up you go for a winner. That's the kind of specificity that we want to trade with. Now I'm going to talk about the pivots or the dotted lines. So it's the 15 EMA of a 15 EMA, Fitzroy. Whatever the calculation is, we do the calculation again. And that smooths it out. And that smooths it out. So what's really important and was so critical this morning in trading were the pivots. And remember that I mentioned that most software tracks the pivots from price high. And I'm telling you, that is absolutely incorrect. And everyone tells you about hidden buyers and hidden sellers. And I was going to put up a chart. We have a very sophisticated indicator that I was going to put up. It's our market profile that shows you the bid-ask disparity in every single tick value. It actually even shows you the point of control of every candle. I mean, that's a very, very difficult assessment to do, but it shows you the POC of every candle. And we used it for months and just found it not to be helpful. So you're going to be told differently, but I'm telling you, it's not going to help you trade. The dogma is if the POC is at the top of the candle, you have a better probability of getting a short. And if the POC is at the bottom of an entry candle, you have a more likely of getting a long. And that POC, you know, that's your hidden buyers, hidden sellers. That's just not going to help you. That's exactly right, Raymond. If you read the tape, it's going to drive you crazy. And essentially, that's what's going on here. Now, the POC is giving you a little bit more of an elegant assessment because it's telling you that tick value within each candle that has the most volume. But it just doesn't help, so we eliminated it. I mean, if all it does is add additional stuff you have to look at, but doesn't increase the precision of your trading, why bother with it? So we spent a couple of months making it, and then we threw it out. But let me tell you, the pivots are really, really terrific, and you cannot trade into one. They sit at the candle body high, and they really tell you where the sellers are. And if we look at some price action here, we're going to find, see right here, here's the pivot. And price tries to break it. It eventually does on this candle right here. So, you know, this could be a potential long, but then you make another pivot here. There are even better examples where price will sit below a pivot and just give you multiple potential entries, and they all get blown away. Here's a good example of these shorts right into this pivot. It's challenged here, it fails. It comes down here, it fails. It goes up, it comes down, it fails. Then eventually you get this great setup and you take the pivot breaker. And what's really powerful about the candle that breaks the pivot is it carries all these residual sellers. We had one on the E-mini today that when it broke the pivot, it shot up about 7 ticks because it stops out all these buyers. And the true candle that breaks the pivot is the one that closes with 2/3 of its candle body below. It's not the one that puts a nose through. It's the one that has 2/3 of its candle body through. And that's the one that really will fire the market out in your direction. That's your entry candle. So if you get, and I'm going to go over all these rules, an oscillator signal here into a pivot, we just call it trading around the pivot. If price continues to go down, just wait for the candle breaker and take it. You're giving up ticks, but you're diminishing risk. And that's really the object of trading. Now, depending upon your automated trade management strategy, you could get this whole move or just a part of the move. But you didn't run the risk of hitting this pivot and getting a reversal and getting, you know, having this market. I mean, look what happened here. We don't have an entry, but if it hit here, it goes all the way to the 50. So you lose that risk. And this becomes a very, very low risk entry. I mean, no system is going to that can present it that anyone can present to you is not going to have some discretionary component. I mean, nobody can make it dummy proof to the extent that, okay, see a triangle go short, see a blue triangle go long, and you're going to make $1 million. It's not going to happen. You still have to bring. You still has to be rules, and there's some discretion in trading, and that's what we're starting to get into. So these are very, very strong pivots, and I'll tell you, I used to think in my head, the first hit, you make an assessment, it's going to bounce. Second hit, you make an assessment, it's going to bounce. Third hit, okay, it's going to go through. But I'll tell you, I've seen so many third hits bounce that now what I do is we trade around the pivot. We wait for it to break, and we take the pivot breaking entry. That's all. I'm not going to take any trade into a pivot. I don't go back and look. Now, in the future, we're going to make an assessment of how many buyers are sitting in this pivot. We can do that because we're looking at the bid ask of every single tick value. And we're going to be able to tell, at least to a certain degree, how powerful that pivot is. Now, that indicator is a little bit a ways away, but we're going to make that pivot. And no one's that kind of pivot. No one's ever done that. Methodologically, I know we can do it and will do it. And that would be part of the upgrade. It would just become a better pivot. And that's something that you would get as part of this system. Now, I would say it's about 3 weeks away, but we know how to do it. It's just a matter of coding it. Sergio's going away for a week on vacation, starting at the end of today. So it's going to push us back a little bit, but we're going to do that. So now let's look at the 3 line itself. Now you can see that the candle halos really tell you everything. Now I want to let you in. I obviously don't want to confuse you, but I want you to understand the truth. And the truth is that all fractal analysis that's done on NinjaTrader will change when you close the platform and open it. And I know that may be a tough thing to swallow, but nothing ever repaints on our chart, ever. Oscillator signals do not change because the oscillator is only trading one time frame. It's not fractal, but the 3 line is fractal and background bias is fractal. So when you close the chart at the end of your trading day and reopen it in the morning, you're going to see that the candle halo has switched. NinjaTrader is going to push the halos a candle or two to the right. And the reason it does that, and they fight with us and tell us it's our indicator, we fight with them and tell them it's the platform, is that, look, if I go to the right edge, right now, what the indicator and the platform are allowing is this candle to assess order flow, stochastic, and momentum off the previous candle. What happens when you close and open is that this candle will be making its assessment off the future candle. That's why the assessment all gets pushed to the right. So this is not, and look at your fly-in right here. Order flow, stochastic, momentum, you've got everything aligned. Now your entry would have been right here. Now you don't have background bias. If you want it to be a little more conservative, you take it right here. And you're heading right to a pivot. And I would close this trade right at the pivot. If it breaks it and you get more, I don't care. I'm going to get out. So I'm not going to anticipate a pivot break here. But here's our right edge. So the analysis that we do on the candle halo, we have to make, is not 100% accurate. And if you look at this short trade, now when you get it, it's going to work. Now here's stochastic. Here's order flow. Now you'll see that this is true. The momentum line is yellow. And the reason it's yellow is because the MACD line is accelerating away from the signal line, but you haven't gotten a MACD crossover yet. Now we want to have that crossover assessed on the line simply for those traders that don't want to take a trade unless there's a crossover. I don't care if there's a crossover or not. That's why I created the indicator, simply looking at the direction of momentum. If this is my signal line and my MACD line is accelerating away from it, you're going to get the halo, even on a yellow momentum line. That's why it's better to look here than to look here. But we can change that, but all our traders like it. And ultimately, this is really what you should be using, not the 3 line, but the candle halo. And this is a tremendously perfect trade. The only thing is, it doesn't come with background. But background, sometimes you have to hit, you see, you have the background. That's the teal color, where the 15 is heading down, the 50 is heading down, but the 15 hasn't crossed the 50 to the downside yet. It's intermediate in power, but you've got an alignment, and you know price is below the 15 and the 50. So you've got yourself a very, very low risk entry here. You could take it out at the pivot. It's perfectly okay. Or you can let the trade ride if you've got all your targets. If you're just on one contract and you've got 2 out, say, or you've got the balance out, tighten your stop and try to get the break. And you get a break and get 28 ticks on this, what looks like a small trade. But the thing is, it's a very, very low risk trade. Anything in here is not low risk, and it's problematic. And even though the market falls, if you'll notice here, we're only looking for long. And then when the direction changes, you have to wait, because the higher time frames are not positioned long. So it takes time for them. And again, it comes back down to, do you want every single trade that wins? You're going to pull in a lot of losers. Or do you want every low risk entry with a high probability of winning? Really does. It comes down to patience and discipline. And the really good day traders have that patience. Now, here's a trade. And remember, this pivot is not just a line. It's an area. It's really important to remember that. Right in this area is where you're going to get a lot of buying pressure, not just right at that line, at that tick value. So you've got no short trade here. If you're anywhere near a pivot, don't go near it. See, it comes right down here, it hits, and it bounces. Now here, it hits. I have to recalibrate background bias. You have to keep doing that on a fractal indicator. And here's your pivot breaker. And here's a trade that does not work. Here's your pivot breaker. It's a good trade, and it doesn't go. So I'm not going to hide the losers nor tell you that we always get 100%. But that's a very nice trade, and one I would have taken any time of the day. Right here. Now here's all chop. Nothing we can trade. All of this is chop. We're going to avoid all of it. And here's your trade. Now the thing is, 2 things. First of all, here's your trade on the pivot breaker. Got your signal. There's your pivot breaker. And that's a nice trade. It's not a home run trade, but it's a first target. Here's your short without the 3 line. And look where it goes. Nowhere. Now here's your continuation trade. You've got no signal, but you've got the 3 line, everything, and you're in and down you go. So you don't necessarily need an oscillator signal. It helps, but this is such a terrific trade. And these are the things we're going to go over in the trading room ad infinitum. And what makes this trade so great is the dark pink background bias, the fact that you have the candle halo, which tells us that you have order flow, stochastic, and momentum in your direction. The 50's below the 15's below the 50. It's fairly tight, and you're given this nice bunch of buyers who've taken this counter trend trade, and you get them to run over. It doesn't work without order flow, stochastic, and momentum, but with it, down you go. Now, you're going to get a lot of traders going short here, and getting stopped out, and you're going to be able to step aside. In fact, so many traders, a lot of traders, then you get a push up, and then you leverage after the push down. It's really, really quite easy. Again, we're not going to look at any. Here's a trade into a pivot. This pivot breaker, to me, is oversold. The market's already come down so much. Now, here's the other thing that I think is really important to understand. When you take an entry, you want to ask yourself in your head, okay, I want 20 ticks on this trade to get a full winner. Am I likely to get 20? You don't want to get a first target. You want to get everything on the trade. And when the trade's already come this far, and you're this far off the 50, it's unlikely. That's why you're just not going to take this pivot breaker, why you're not going to take this continuation short. You want to stay right here where the 50 and the 15 are tight. And then as they start to separate, be more and more careful about taking a continuation trade. Because the likelihood, remember, there's a powerful force called retracement to the mean. And as price begins to pull off the mean, which is the 50, you're getting it's becoming more and more likely that you're going to get the retracement. And here, the market just pops right in the opposite direction. So here, you're going to trade nothing. And if you tried, you would just wind up you'd take a loser. And here's your continuation on a pivot breaker and up. Here, no background. Don't trade. You can't trade. You'll have to let this winner go, but you don't take this loser. That's the key. You're going to lose more on this loser than you will make on this winner. You couldn't take this anyway. You don't have the 3 line. And here's your great trade right here. Now, you've got to make a decision whether you want to close the trade at the pivot or not. If you hold, you got a terrific move. But this has enough space between the pivot and the entry. This one, a little tougher. This one has backed off. So listen, this one could give you a loser. My recommendation is just to stay away from these pivots altogether. Now this one is just really tough. You can't take the trade into the 15. And this is right into a pivot with the 3 line telling you it's not going up. Now let's see about this trade here. Now here's a potential loser. This is at 13.18 right here. It's really a nice trade. It just doesn't go. Now there's your winner. And this is the kind of trade, when you trade around the pivot right here, you get this entire move. This is really what you wait for. See how tight the 15, see how tight this is to the 50? 15's really close. This isn't the most powerful back down color, but this trade is absolutely beautiful. Get the oscillator signal, wait for the break, and if you let the trade run, potentially get 75 ticks. Now here's a winner on the pivot break. It's a small one. Here's no trade, no 3-line. No trade, no 3-line. No trade, no 3-line, and you're trading into a pivot. So you avoid all these losers. And there's your winner. And that's your goal. Now, I'm not making these rules up as I go. These are the rules that we use to trade with. And in fact, they're hard and fast. And we don't play with them. And we have no short here, and we have no short here. There's the pivot breaker, and there's your winner. You're not going to take this continuation. You're not going to make the assumption you're going to get another full 3 targets or 2 targets. This is not going another 20. Now, might sometimes crude goes 75 ticks, but on a statistical basis, you're very unlikely to get another full winner. So you're just going to lay off that trade. Here's another trade. There's your pivot breaker, and it's another winner. I mean, for every loser, you're going to find 7, 8, 9 winners. And you do get losers. There's no 3-line, there's no trade. Now, this is into a pivot, you're not going to trade it. Into a pivot, you're not going to trade it. This is pretty tight. This is sort of discretionary. I would have held off this trade. I mean, I just don't have to trade anything really where I can whiff a pivot. Here is your perfect pullback and continuation with the order, with the 3-line, with green background, with the 15 above the 15. It's a perfect long trade. And they're not hard to get at all. This, when there's no background, just leave it alone. Here, look how price is constrained by this pivot. Comes up, bounces. Comes up, bounces. Comes up, and bounces. Comes up, and now it just completely collapses. So you could have potentially taken 1, 2, 3 losers here if you were going to trade into this pivot. Now, this pivot is at the candle high. The wick high here, you would have been much more likely to trade it. That's not where resistance is. Resistance is here. And you can see how price respects the candle body and just won't go through it. At least it won't be able to get 2/3 of a candle body through that pivot. You move that pivot up here, it's giving you an inaccurate assessment. It's also going to give you an accurate assessment when the pivot's broken. And so you have to be very careful about trading into a pivot and no background. Now, let's look at a different market. We'll look at the E-mini. There's a lot of traders trade it. And if you want to see another market, just let me know. Into the pivot Fitzroy means, you trade up where the pivot's close and unbroken. Trading down, you're trading into a pivot that's close and also unbroken. You want to trade around those pivots. Now, would you have to change the Renko setting to 428? Now, normally we don't give away the pivots. It's not part of the system, but we're giving them to you. And today, this offer closes. If you buy today, we're going to give you the background buys. You're a little bit of a salesman, but you'll get everything that you see, everything. Now, the E-mini today was very difficult, but it's good that you basically don't get a signal. Right here, you have no trade. There's no background. and it's just too risky to take it short. Here, if you go long, you're done. Here, if you go short, you're done. You lose. You can't take this long trade. It goes up to the pivot and stops. Hold on one second, Raymond. I'll answer your question. This pivot breaker is tradable. To me, it's too risky. I didn't take this trade, and it would have given us a first target. So far, there's nothing to trade. Now, here's a trade to the downside without background bias, and here's your trade. You just have to wait for it. You have the oscillator, the 3-line, the 50's red, the 15's red. You've got the 3-line, and there you go. Now, is it a monster trade? No. It could have been, but where does it stop? Close to the pivot. And listen, that's not a bad trade. That's 14 ticks. It's 3.5 points. It's a very nice trade. That would have given us a full winner on that trade. And it's just sitting right there. All you had to do, though, was sit on your hands for almost an hour and a half and wait. Now you have a pivot. And you just can't trade down into it. And now you have a move up. And you just can't trade it. Now here's a long signal. And let's see how far it goes. It goes 5 ticks. We need 6 ticks for a first target. So we wouldn't have made it on this trade. Here, there's nothing to trade. There's nothing. There's nothing here. Nothing. So really, in the whole day, what you got was this winner and potentially this loser. That's it. And this is a very difficult day. There's a lot of potential losers here that other traders are going to go for, especially during this period here. Let's look at the E-mini yesterday. Today is brutal. It was a brutal day for it. I'm not kidding you. Today, it gave me acid indigestion to trade it. You had to be ultra conservative on it. Here's yesterday. Now here, you just miss a trade. You can't take it. You're trading into the pivot. But you take the pivot breaker, and you've got yourself a nice trade right here. Now this, to me, is a little bit overbought. I don't anticipate getting a full winner here. There's your perfect trade short. This is an entry, but I wouldn't take it because it's too far down. I wouldn't anticipate getting a full winner here. So even though that's a winning trade, I would not take the trade. Here it's stopped by the pivot. There's your pivot breaker right here. Background bias is in your favor. Actually, the pivot breaks right here. And you can take that trade all the way. That's a huge trade. Here's the pivot. It's going to stop you. Now, the pivot breaker doesn't have the 3 lines, so you have to wait. Here it is, and there's your move. Gigantic winner. Now you're too far down to take an additional trade, and you have to wait for a retracement. And you start getting it, and you're into this pivot now. Price hits it and bounces up. Price hits it and bounces, and now there's your pivot break, and down you go for a nice winner. Here, you break the pivot without the 3 line. No trade. Just saved you a loser. Here's another potential short trade. No 3 line. Saved you another loser. Censors a ton of losers. No background bias. Just leave it alone. It turns into a nice trade, but we can't trade it. This is just one that doesn't work. Nor does this. I mean, don't be frustrated because you saw how many losers it protected you from taking. And here's your pivot breaker right here. We traded around the pivot. We wait for the break. and we get a full winner. And now we're at 1,400 hours. So I hope this gives you a feel for the system. Now, obviously, there's some trade. I'm trying to be as accurate as I can as I would in real time. When there's no 3-line, you can't take the trade. This short on the pivot break is no trade. This short continuation, there's no trade. You have to use some discretion as to how far the move is made to decide whether you're going to get another full winner. You cannot trade into an unbroken pivot. Below the 50, we only trade short. And we only trade with pink background bias. It's an awesome entry. The entries on light pink and the entries on bisque are riskier. But you still know you only can go short. And like these counter trend traders are doomed. Absolutely doomed to go absolutely nowhere. So it really gives you an absolute direction to trade. And you're going to see in all these moves, there's going to be a ton of counter trend traders in these moves. And I'll show you one move. Like in this move down here. Long and long. And where are they going to go? Now they're calling the bottom. They're calling the bottom. But you're not going that way. Now here you can't go short. You have no 3-line. And you're not going anywhere. Here, I would consider the move too distended, too extended. I wouldn't take this move short. Here's your sweet trade right here on the first pivot break and the move down. That's your great trade. And here is your stellar trade short. Now, are you going to get 100% winners? You're not. Are you going to get 80% or greater winners? If you follow the rules, you will. So you're going to get 2 out of 10 trades that are just not going to work. So a lot of those trades are going to be trades where it's just really hard to tell whether price is extended or not, whether it's pushed a little bit too far, and it just doesn't make it because of that regression to the mean. These trades right off the 50, where the wick goes through the 50, and we have guys, these are the only trades they'll take. They're looking for a wick through the 50 or a candle body through the 50 with the 15 below the 50 and red, the 50 red, the oscillator signal, and the 3-line and background bias. That's all they'll take. And they trade these with a lot of contracts. So they take fewer trades on really low risk, looking for a perfect setup. And there's nothing wrong with that, because these are the sweetest trades you're going to get. And you'll probably get another one somewhere here. See, here's has no background. I mean, here you can take the second candle, no sweat. And the second candle has a wick. This is a very, very good trade. The risk here is you're trading into this pivot. I just want to, appraise you of it. I would probably take this trade and be very careful with my stop here. And here's the trade that you want. Now remember, Ninja pushes this to the right. You're going to have pink. And there's your trade. Those are the trades they wait for. So let me see let me see if there are any questions. Hold on, let me get yours, Raymond. Are any of the indicators measuring order flow, delta? Okay, Raymond, indicator, this line here is measuring the order flow delta right here. And what it's doing is off of the 2 higher time frames, it's looking at the candle delta of each of the 4 and the 6 unit Renko. You're going to get a number. Maybe this up candle is going to give you a positive 600, say. But remember, you can get a positive number on a down candle. Maybe this is an up candle and you get a negative number. only one standard deviation's worth of data is going to work for you. This is minus 399, whatever. But it takes all these values and puts them into a 15 period simple moving average to create a slope, a delta slope of the two higher time frames. And that's what this that's what this lower line is assessing. And it's a great assessment of buying and selling pressure. Because when you filter out the outliers and just take this one standard deviation's worth of data by putting them into that 15 period SMA, the slope of the lines correspond, you very likely have significant selling or buying pressure. And that's, I think, the best way to use the delta as an assessment of which way to take the trade. And you see how many trades don't make it when you don't have the three-line assessment. When something's against you on that three line, the trade is very likely to blow up on you. And I took 2 trades today without the three line, and they both failed. And I basically wanted to jump out of my skin. Remember, it's one independent variable. I had everything else perfect, and they went nowhere. It's a really critical parameter. There is no webinar tonight, Mikey. This is it. So I hope you all understand the system. So you're going to trade with me for a month, and believe me, you're going to understand exactly how to take these trades. I trade around the pivots. I only trade with background bias. It's almost a religion of mine. If I don't have background, I don't take a trade. If I don't have order flow, if I don't have this halo, I don't take a trade. I only want to take low risk trades, and I try to stay tight to the 50, as tight to the 50 as I can. Today, I peeled off just a little too big. I had 2 5-tick trades, and our first target 6, and I just missed them by 1 tick. And I think I chased moves that were slightly overextended. Those are judgment calls. I can't tell you when a move is overextended or not, because these are moving exponentially. It's really discretion. I mean, for me, I would not take another trade. After I got this winner, and this is the E-mini, which doesn't have a huge amount of volatility, I would not look for another down move for a full winner, and another down move on a full winner. Remember, you understand, every time you take an entry, you're assuming full risk. So what you want is a full winner. That has to be your mindset. Can I get all the way to where I want to be on the trade on my entry? I wouldn't think so here. I'm not looking for one target. I wouldn't think so here, because I'm assuming all the risk I assumed on this very low risk trade. That's how you have to trade, and that's how you make money. So, let me just quickly show you the offer again. I have to find it and open it. It'll take me 1 second. Hang in there 1 sec. Let me get it. Here's another chart I have floating around here, which I don't need. Let me just go to my workspace. I only have about 500 million things on my desktop. I have more stuff on my desktop than, let me find it. Here it is. It'll come up in a second. And also remember, if we make upgrades or add-ons, you're going to get those for life. We're always looking to improve the system, and we're going to be improving the pivot assessment, and anything that we can do to increase the probability of you getting a winning trade is going to be given to you. It's going to be handed to you. Now, let me see if this is the one. No, that's our Forex trader. It's a different one. Hang on a second. Here it is. Nope, that's another one. Hold on. Of course, I can't find the right one. Hang on. Because I do want you to see what you're going to get here. That's not it. That's not. Hold on. Here it is. It's $6.99. It's a lifetime license. Free upgrades for life. You're going to get a month in the room with me and as much educational support as you need. And the room is a lot of education. After we finish trading, we go over every trade. And I usually spend 45 minutes or more after we finish going over why I took a trade. Everyone wants to know why I didn't take a trade. I mean, we just go over all the trading rationale. You're going to get a 10-module educational training. You're going to get our video tutorial library, which is 450 videos. And I have the first 5, but anyone who buys today, because it's the last day, will get the bias, the background bias, which is really, really valuable. So I'm going to take out the first 5 because if you come aboard, we're going to give it to you. And I do webinars on just trading with background bias as an add-on to your trading methodology, whatever you trade. And what's great about background bias is it has no inputs. Like if you switch to a time, it will automatically, if you trade a 5-minute, it'll automatically assess a 15 and 45. If you trade a 377 tick, it'll automatically do a 610 tick, which is the next fib number, and then the next fib number up. If you trade a 5 range, it'll automatically look at an 8 range and a 13 range, which are the next 2 fib numbers up. So it automatically jumps to the 2 higher time frames without you doing any juggling of inputs. It's all assessed by the code in the indicator. Yeah, that is Mikey, but you're going to get that oscillator. Here's the oscillator right there, and it's a really wonderful oscillator. It does not behave like any other oscillator because it's the only one that takes the oscillator formula and raises it to the second power. And it's the only one that can keep up with the speed of Renko movement. I mean, every candle here is either 2 ticks or 1 ticks. Absolutely, you can change it to a time, tick, anything you like. It does not matter. I mean, the oscillator is geared to keep up with a fast market. But if you slow the market down, the oscillator will still give you great trades. And I'll show you really quickly. Let's look at a 5-minute. Now, the 5-minute is going to be, let's look at a 3-minute here. See how choppy it is? It's a lot choppier on a minute chart than it is. I have to take off all the drawing tools. You know, hold on a second. Let me just look one thing here on bias. Okay. Yeah, this is just so choppy. It's a lot harder to do it. It works for Forex, Lionel. In fact, if I had my Forex data feed, if you hang on 1 second, I hate to drag this out, but if you hold on 1 second, I'll show you Forex. I mean, it's awesome on Forex. Let me disconnect my CQG, and let me disconnect my my Kinetic, and I'm going to connect my Forex data feed. I'm going to show you the Forex. The thing is, you're going to have to, what you're going to do is you're going to have to take the signals off a demo of this. We don't have it on MT4, but I will show you the trades that you will get and the entries on the Forex. That's connecting. Hang on 1 second. Still thinking here, waiting for it to go green. All right, it's connected. So let's take it out of the minutes. Let's go back to Renko. Now on Forex, we use a 428. And let's put in a Forex pair. And let me just reload the template, because it'll just reset the size of the candle bodies. And now we'll go to a Forex pair. We can go to any of them. Where are they? Here they are. All right, why don't we look at the we'll look at the euro dollar. Now here's the euro dollar. You'll see it's exactly the same movement. We're not going to trade that clear area. We need more days to load, because there's not a lot of volume here on the euro dollar. Let's go to a 10-day. Now, there's an entry, there's the break, and there's a trade. There's an entry on this break, no 3-line. No background, we don't trade. Now, there's your stellar continuation trade. All the way down. You're not going to chase this down again. Unfortunately, on this down move, there's no background bias. Not a whole lot of entries here. Let's look at another pair. Let's look at the, you have a pair you'd like me to look at? The pound dollar? Sure. Right here. All right, we'll go all the way to the end, and we'll look and see what we got. Now there's no trade here. Now here's a trade. Now this is at 3 o'clock in the morning, and on the Forex, that's fine. And this does not look like it makes it, and it's a great trade. So that's a loser. We start right off with a loser. That's okay. We'll keep looking. There's your winner. Look at this winner. Oscillator, halo, 50, 15, and look at the size of that winner. It's huge. Now, I would not take this continuation, because I would consider that's such a huge move. I would not consider that. I would not think I was going to get another one. And this is a to here, 40 pips, a nice move. No background, we're not going to touch it. Even if it's a winner, it's too risky. This move down into a pivot, this move down into a pivot. We avoid even the potential. There's no 3-line, no 3-line. There's your next trade. It's a little risky, because you got your pivot here. I might have stood aside on it, but there's the trade. Now, if you can't take this pivot breaker. If you take this, you got a winner. No trade, no 3-line. Look at that continuation trade. That's a gorgeous trade. Right down. 15's below, 50, 50, 15 below. It's great when price comes right up to resistance. You've got the 3-line, and you've got a nice short. This continuation I would never take. I call this a hanging candle. It's not even near resistance. And you're not going to anticipate a further move down. Now here you have to be a lot more conservative. What you want to do is take the trade right here. But this is not a good trade, not a good setup. This pivot breaker is going to cause you a lot of problems here. And you're going to have to stay. I don't know this instrument very well. So here's your pivot breaker. You get a big move. Then you're stuck right in here. You have to trade around. There's your pivot breaker, and there's your move. Now, no more shorts here. This is a huge move, but I wouldn't take it right here. I'd be too frightened of that. If it goes down again, I would not take it. Again, I'd be a little too timid to take it. Look at this thing. I mean, it never stops going down, but that's the way the market is sometimes. Now, here's your pivot breaker, and there's your move down. Here you can't trade right into a pivot. No background, we're just going to ignore it. Can't trade long, you're right into a pivot. There's your pivot breaker, and beautiful long trade. Now, there's your pivot breaker, beautiful long trade. Now, I wouldn't have taken this pivot breaker. I'd be a little bit too timid of that because I think you're pretty far up off the 50. But that it is a winner. But I wouldn't have taken that trade or that trade. I would want to see a retracement first. This pivot breaker you can't take. You could take the next candle. And the reason you can is you got to move all the way back to the 50. And now you've got a new move up. Here's another pivot breaker and up. Okay, Lionel. I mean, you get great signals. I'm telling you, the Forex comp really, really gives you excellent signals. It's a great instrument to trade on the 3 line. And you will get really, really nice entries. You're just going to have to take the signals on MT4. That's all you have to do. And you can trade as many Forex pairs as you like. So if there are no other questions, I'm going to end. And listen, I hope to see you aboard. And I mean, my goal is to make us money every day. I don't trade the Forex, but Keith trades the Forex at 7:30 in the morning on Tuesday, Wednesday, and Thursday. He uses a different system, Lionel. But he's a great Forex trader. Now, so you would have a room to go in that's trading Forex, and he trades a lot of Forex pairs at the same time. So you could go into his room or you could go into my room. Would it make any difference? I mean, I'm trading futures and he's on Forex. So everyone have a really, really wonderful, this is Thursday, have a wonderful weekend. I wish you the best of luck with trading. It's not easy because you really have to have patience and discipline. If you do, though, you're going to make money. I mean, these are going to give you great signals. You're trading off of a lot of data and a lot of time frames. That orders it really nicely on the chart. So take care, everyone. Have a great afternoon, and thanks so much for coming in. Bye-bye all.